we'll be looking at impact investing and the role funders play in driving positive growth. How do we identify and drive more capital into new companies that are truly transforming financial services for the better? And how do we serve and support, especially our underrepresented founders? To ask these key questions, I'm very pleased to welcome Bryony Widdup, who is the finance and fintech partner at Hogan Lovells, on stage.
Thank you, Rashi, and hello everyone, and welcome to our panel today on investing for impact. As mentioned, I'm a finance and fintech partner at Hogan Lovells. I'm moderating the panel today, and I am delighted to be joined by Hannah Gilbert from the British Business Bank, by Tim Levene from Augmentum FinTech, and by Dan Graf from Earthchain. Thank you all for joining. Okay, taking a minute here to set the scene. Now, we hear a lot about the need to direct scaled capital flows for purpose-driven outcomes, to apply capital in ESG-sensitive ways. There are lots of ideas and initiatives in the crossover space between technology and fintech specifically, and purpose businesses. But there are worries about the lack of available capital, available investment, and also lack of investability of some of those businesses. And so we are going to explore all of that today. We're also going to think about what happens when capital has been deployed, but isn't necessarily achieving the right purpose or isn't doing that efficiently. Obviously, we have challenges around greenwashing and broader sustainability washing, and that creates trust issues. And so we're going to explore what can be done, in terms of using technology to try to solve around some of that as well. So, unlocking the keys to this, the challenges, the drivers, how to connect purpose, profitability, and investability. Tim, I think we'll start with you. On that question of allocating capital to impact, what are the main challenges with that from your perspective? As a fintech investor, obviously you see businesses that have that combination in the crossover between fintech and purpose. What are you looking for if people are looking to kind of make money work for good?
So we are a for-profit investor, first and foremost, but profit can also go hand in hand with purpose. Ultimately, we're looking to drive returns for our shareholders, but I would say that over the past 2 years in particular, there's been a big shift amongst the investment community, not just from impact funds, because the reality is they are few and far between. And I would say if we roll back to 2020 and 21, we saw more pure play impact investing funds being created, but ultimately, if we look now in 23 and into 24, you are seeing fewer of them, and investors are demanding ultimately returns. And I think what we're looking for, and we would have a number of areas of thesis across our team. We would have a couple of members of the team that really have climate ESG as one of their core underlying themes, and ultimately we will be mapping the market. We'd be looking for trends. We're a Series A investor, so we're not seed. So ultimately, our job is to be early, but not too early, and to really look at those innovative propositions that are solving real problems that either consumers or businesses want solving, and ultimately that can generate income and ultimately profitability in the long term. I think maybe we'll talk about it a little bit later. One of the challenges that we're finding is we are seeing some consistent areas, but everybody seems to be rushing towards that, whether that's measurement in particular, analytics, data, etc. That is a problem that large corporate, small businesses are all having. But I would say, you know, the one thing for us is we really do want to find businesses that have purpose. A lot of our underlying businesses are absolutely trying to make financial services more accessible, and as such have real purpose in that, but fundamentally have gone to that with a profit-seeking motive and trying to build a long-term viable, profitable business. So I think they can go hand in hand, and perhaps we'll talk a little bit later about some of the examples of businesses that you might not ordinarily think are purpose-driven, but fundamentally are.
Yeah, sounds good. Thanks, Tim. So, Dan, moving to you. Obviously, we're hearing about, you know, the deployment of capital there, but what about from an investee perspective? With your business, what's your experience with this being a business that integrates these kind of technology and purpose features? And can you dive a bit deeper into what technology actually brings to the table in this context?
Thank you, Bryony, and yeah, it's great to be here today. You know, I'd like to just pick up on the point that Tim just made about having purpose and being for profit. I attended an online event from New York Climate Week the other day, and there was a quote in that I thought was really fantastic, purportedly from the CEO of Oatly. I can't verify that. And it said that profit without purpose is meaningless, but purpose without profit is unsustainable economically, right? I think that's a really important thing to realize. And it's difficult as an early stage startup like my company Earthchain is to find that seed capital from investors who you can trust to also share your vision for purpose and who perhaps can help you to identify how you can transform and shape your business so that it actually can maximize that purpose while simultaneously generating the return that I think that in the way our system works, you should be able to return to your investors. This Earthchain is my first rodeo. I built a business before called Infraxis, a payments processing software company, entirely bootstrapped. So far, Earthchain, apart from a few sort of angels, is entirely bootstrapped. It's the way that I've experienced building companies before. And you know, we're at a stage now where we're getting some really interesting traction and some great questions being asked by fintechs and payment companies that we're working with, retailers, in fact, some really well-known ones, where to help us to grow, it would actually be very beneficial for us to be able to access some capital. But how do we, with the amount of work that we've got in front of us, identify investors who really share that purpose and will help us to shape our commercial offering so that it gives them the best return and gives us the most efficient deployment of our resources to create that purpose as well?
Thanks, Dan. And in terms of, you say that you're obviously working with some kind of fintechs and other businesses, that bit about what technology brings to this context, obviously some of what you're doing, more the substance of your business, is delivering a bit on that technology piece for these kinds of purposes in other businesses. Can you explain the connection there?
Yeah, so Earthchain is a sustainability enabler for businesses that aren't directly sustainable or sustainability-driven companies but have ambitions in that direction. So if you want to create a green fintech, you can work with us and we can analyze some of the payment data, spending patterns, and, for example, give consumers education about the impact of their spending by looking at that data. It's quite fascinating what you can work out. We also work with a global NGO called Gold Standard. They certify climate projects, and we make it possible to invest in those projects at a really fine scale, you know, down to the kilogram, to bundle funding climate action into everyday consumer experiences. I always get a little bit sort of antsy when I go to a store and I buy the shoes and they plant a tree, and I think, well, how's that verified? How's that monitored? How do I know what's going on? At least with the projects that we fractionally fund on behalf of consumers through Gold Standard and their incredible project developers, there is monitoring, reporting, and verification. It's just not very technically advanced. And so what we do at Earthchain, as well as analyzing data to help to bring carbon literacy to consumers and to retailers, particularly small retailers, we also track the impact that people who contribute to these climate projects have using a blockchain, a low-energy blockchain called Stellar. Stella's amazing because it is a FinTech rail. It's designed for moving money across borders. They're integrated into MoneyGram. It means you can get funding onto the ground to a farmer in rural Uganda as part of funding a carbon credit. It's so equitable. It's actually a work of genius. So the platform that we have enables that to happen with unprecedented transparency, instant audit, and because I've got a history in building payments technology, it's built like a bank. It's redundant and fast. That's what we want.
Okay, so your solution is helping other businesses to generate, to quantify, to generate relevant data that maps their, some aspects, in particular climate-related aspects of their own impact. And it's interesting, Hannah, we'll turn to you, because I think, I know you're really interested in this piece around evidence, delivering evidence of impact of your business in order to unlock capital, or to help you unlock capital, and also education around that, and thinking about what is the decision-relevant data. There's no point us all swimming around in oceans of irrelevant data, so trustworthy and decision-relevant data. So what's your view on that? How can businesses be better at generating the right type of data, and how can we build more trust in it?
So yes, I am at British Business Bank, and we, I suppose, have three lenses in a way on this challenge. One is, of course, as a medium-sized company, we're having to better understand our own operations and our own footprint and that of our supply chain. We also deploy capital through a whole range of intermediaries and delivery partners themselves, from very large banks through venture capitalists, right the way down to a whole plethora of even of asset finance providers as well. So they're all at a different stage of journey, of maturity in their own journey, and understanding the impact of their portfolios. And indeed, the SMEs that sit at the underneath. And then the third angle that we have is as a centre of expertise and an advocate for SMEs in the UK. That's our primary role, to support and address access to finance for SMEs in the UK. And in that regard, we're really proud to co-chair Project Perseus, but also, use and showcase and share some of the technology solutions that are coming to market. 3 years ago, many of our, say, ultimate SMEs and indeed some of our delivery partners, if you'd said, well, what's your environmental footprint, it would have, they would have had to run over to the waste paper basket and try and seek out their last energy bill. So there can be a lot of fear and around the ease and complexity of evidencing and reporting your not only just your carbon footprint, but your footprint more widely. And that's where we're very excited about the sorts of technology solutions that are coming to market today, either being integrated into accounting platforms, as I say, as well as direct B2B and B2C offers as well. So SMEs can have more confidence and being able to estimate their own footprint and then share that with either their providers of finance or indeed their corporate customers as well. So those are some of the key drivers, I think, that we have in the bank.
Yeah, that's really interesting. I think it's really, interesting understanding what some of these kind of technology tools can bring, because obviously they've expanded, the range of tools that are available has expanded significantly in a very short period of time. So having networks and, like you said, relevant centers of excellence that can help people understand the real benefit of some of these tools. And then maybe bringing this back around to the investment angle. If you have a business that's now generating hopefully lots of quality and relevant data around its impact piece, and Dan, you mentioned it, and Tim, you picked up on it, that business is looking for, presumably then, particular kinds of investment partners, right? There's a slight protectiveness, I think, around this interaction then between the purpose end and and finding the right partners. I'm going to say it's a very sort of, I think, partnership-driven kind of mindset. Dan, maybe you just want to touch on that briefly, and then Tim, maybe you can pick up on some examples of this integration between sort of purpose and then what an investor's looking for, profitability, and how that sticks together. Dan, do you want to go first?
I mean, I think partnerships are massively important, especially for early stage companies to, you know, be your growth engine, to accelerate your access to the channels that you want to get involved with. It's massive. But one of the things that's quite difficult for a climate nerd like me or a FinTech nerd like me, who's really into the technology and the capabilities and the data that we have, is to understand how best to commercialize it. And there are loads of accelerators out there for regular businesses, regular startups, regular FinTechs, but there are not many out there who will help to shape a purpose-driven FinTech. I know one, the Sustainable Ventures, who we actually worked with for a while, and we got some sort of coaching with them in conjunction with the facility where we work up in Leeds at Nexus, which is part of the University of Leeds, and that was really valuable, but it was just a little taster. I think it would be very beneficial for companies like ours to be coached by investors who would like to see profitable for-purpose companies to help us to identify those profit centers and those revenue streams and accelerate them and make sure we're going in the right direction for the investors.
Fabulous. I think, Tim, you've just been called to action there. How's your coaching skills?
I'm glad I'm not a seed investor, because that's what they should be doing. I mean, I would say accelerators, you know, seed funds, that's fundamentally their role, and I think you do see that, whether it's you know, the likes of Seed Camp or, you know, Techstars or others. Ultimately, they're there to help kind of put some meat around the bone, entrepreneur first and the like. Kind of want to touch on you know, the original question, which is, you know, finding your investors. And I know we've got entrepreneurs in the room building early stage impact businesses. And the one thing I always say to founders is, when you pick your investors, you should do as much due diligence on them as they're doing on you, because the best moment of the relationship is the moment in which the money goes in the bank, and then it goes downhill from there. And the next high is, if there is a high, is when you exit, and hopefully at a you know, at a great return. But there's a long journey between that first check and the exit. And it's really important that you have that chemistry. And I think we saw a lot of founders make that mistake in 2021, that took money from the highest bidder rather than from the most experienced investor that was going to be patient and, frankly, still around in 2023 and 24 and not tourist capital. So my plea to entrepreneurs out there is really spend time getting to know your investor as well. I think the second part of the question was, you know, what examples are there of businesses, FinTechs, that arguably have become really profitable, but have been very purpose-driven, but perhaps that's somewhat secondary. These were solving big problems in the market, fundamentally that consumers or businesses were prepared to pay for. And I think we've got so many examples, and I think one of the challenges that we have as a FinTech industry, and something I talk with Janine at Innovate Finance about, is we need to shout about that much more. So whether it's, you know, the likes of Tide or Starling opening up access to small businesses, because we talk about SMEs, but really they're serving the micro business, the sole trader. They're giving them the platform to be able to actually transact and take away a lot of that kind of behind the scenes admin to allow them to build their businesses. Or democratizing access to banking for, you know, the underbanked, the blue collar worker, the Moneses of the world as well. So I think we've got so many fantastic examples of businesses that can target really large demographics. The challenge we have as an investor, and I think the challenge to entrepreneurs out there looking to build an impact business, is don't be too niche. Because we do see a lot of propositions that are serving a real niche. We understand they're solving a problem, and they might say, if you open a bank account, we're going to plant a tree. Yeah. And Dan will tell you, well, how do we know they're really planting a tree? And ultimately, I would rather we had a fantastic technology platform that does everything that the environmentally aware consumer wants, but at the same time just does good as part of our overall business, and it's not their single USP, because that on its own isn't enough. Or if you invest on our platform, all we are going to allow you to invest in is renewables or purpose-driven investments, because ultimately that is not a big enough market opportunity today to build a significant enough business. So that's kind of the journey we're on, and I'm sure we're going to get there. But we just need to see these niches somewhat expand or be a little bit more differentiated.
Thanks, Tim. So our timer isn't working, but I'm told it's time to wrap up. So thank you very much, panel. That was fantastic, and for all of your insights. And thanks, everyone, for joining us. Thank you.